Hello, everyone. My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is September 2nd, 2022, and stocks and crypto are rising while the dollar is falling. All right, the DXY just broke major support. We're going to talk about all of that and more today. If that interests you, then stay tuned. Welcome to the live stream. Hope you're having a great Friday. All right. So, as we said yesterday, we were likely to get a play to the upside from this bullish divergence on the daily time frame. And we see that we had that strong bullish divergence on the daily time frame that's been confirmed, and we actually confirmed that all the way on the 29th of August, okay? So that was confirmed on the 29th of August, and our K and D lines crossed to the upside, and it's pretty much since then been a waiting game, right? We've been consolidating, we put in a few candles, still pretty much playing out our consolidation reversal pattern on the smaller time frames. But what I want to show you here is, and it's kind of very clear, just doing the straight pattern analysis, you can see Bitcoin has been in a falling wedge pattern, okay? And these falling wedge patterns are typically bullish. They typically break to the upside. And the confirmation of the upside break is a break of the upper resistance, which we have, and then a retest, okay? Every time you want to play one of these patterns, you got to break, retest, then go, okay? And I guess the best buy is on the retest, right? If you're going to be trading these patterns. And so that's exactly what we got. And if you go into the smaller time frames, let's jump down into the 4-hourly time frame. You can see the retest right there. Do you see? Right here. You got the break all the way to 20,300, the retest, and now this is the breakout, okay? So the breakout just started at 8 a.m. Or no, that was when the candle opened. Let's see when the breakout started. Yeah, around 8 a.m. At 8 a.m. So this is a confirmed breakout of this pattern. What's the target of this pattern? Let's go back to our higher time frame. Right, the target of this pattern is all the way up here, right? So a falling wedge, the target is the top of the wedge. A rising wedge, the target is the bottom of the wedge, right? So this is the target, the technical target for this breakout. It's about 25,580, which basically takes us to the top of this pattern, making a nice W pattern, okay? And this is a very strong pattern for high time frame reversals, right? We're on the daily time frame. At the bottom, you get a W reversal. If you go to the weekly time frame, you see what that looks like, right? You see a W reversal here. If you come up, you're basically creating strong bullish divergence on the weekly time frame, okay? Which you don't currently have on the weekly time frame. So this is what we're looking at. Although you don't see strong bullish divergence on the weekly time frame, I think we did see some bullish divergence on the monthly time frame. Let's just double check that. Yeah, we did. So we have strong bullish divergence on the monthly time frame, okay? And we showed that right here. This low connecting those two lows right here, and then these two double bottoms are even. So we have strong bullish divergence on the monthly time frame. Once we get to the top of this pattern right here, okay, and we can do away with this, we will then get strong bullish divergence on the weekly time frame, okay? So let's just double check that everything's okay with the stream. Please shout yourselves out upon entering the stream, like the stream, all that stuff. Subscribe if you're not already subscribed. I try to go live at least once a day. Not exactly sure. This is new for me. Typically, I only go live on Tuesdays, but I'm gonna switch it up and try something different out. I like the live format. It's just kind of a freestyle, and my recorded content is freestyle anyway, so I figure might as well just go live. And if there's a certain topic that I touch on that I think is worthy of sort of focus, I'll simply just cut and repurpose pre-recorded content from that. So that's pretty much what I've been doing. For everyone who's been subscribed, wondering where the regular daily Bitcoin updates are, wondering whether or not I'm still going to keep the Tuesday live stream schedule. I think this new format's here to stay. I still don't know how it's going to work on the weekends. I'll see how I feel, okay? Because if I don't feel like it, I'm not going to do it. But I typically feel like I'm charting all the time anyway, and talking about it, so it's likely that we get 6 live streams a week, maybe. So we'll see. In any case, yeah. Let's check how we're doing here. Looks like everything is good. Recording. Perfect. Okay. Yeah, once again, I hope you're having a great Friday, and let's get on with it. So, as we said, the target here is the top of the wedge and the top of this pattern. Now, how is this going to play out? If this is indeed our bottom, okay, which we think it is, okay, and by bottom I mean the technical and nominal bottom of this bull market, or of this bear market, sorry. So just looking at this 20K level, I don't see us coming down any further. And actually, if we come up to this 25K level, this 25K level right here, that would be confirmation of the bottom, because a lot of people see this as a bear flag. They see also this as, some people are just counting one more wave down for some reason. But that basically a move up here, okay? A move up here would confirm. So like a break of the falling wedge and a move up to this resistance would confirm kind of our read on this, which is simply reading 2 degrees of consolidation reversal, or AB basing, on the daily time frame. And just let's reiterate that really quickly. Let's get rid of our momentum indicator because we don't need it for the moment. And it would just be, reading this as your initial break of structure targeting wave 4 of the previous trend. That's your counter wave, your B wave. That's your first degree of consolidation reversal, right? And then this is the beginning of your second degree. You have a 3-wave move here. That's what you would call small a. And then your B wave, which is a compounded B wave, you would call that small b. This is another kind of small consolidation reversal, AB base, to reverse this trend right here from small b, and that should take you up and out. So this should be the beginning of the bull market. Now, what do we, how do we confirm that that is indeed it? This move should, it doesn't have to be, but it should be really strong, okay? It shouldn't take too long. It should be quite strong, even though there's a lot of resistance here. Let's turn on our VPVR, our horizontal volume indicator. Even though there's quite a bit of resistance here, we should get up here quite quickly. And we should start to show some strong volume, okay? So we should see those two things. We should see velocity and volume. Velocity and volume. That's what I want to see as confirmation of our read that this entire region was 2 degrees of AB basing, and as a result, sufficient for our bear market consolidation. Okay, that would have put us at around 100, or no, that would have put us at about 76 days of consolidation reversal, right, from our technical bottom, right, our our orthodox low on June 18th. Okay, so that's what I'm seeing on Bitcoin. Likewise, stocks are also going to the upside, right? Equities, stocks. Let's have a look at the SPX. This is what we've been using as a proxy for the stock market. Okay, and you can see on the daily time frame we have two green daily candles. Let's jump down on the 4-hourly time frame, and we can see a nice strong bullish candle. Let's turn on our momentum indicator. We can see, what do we see on the 4-hourly time frame? We can even see this on the daily time frame, but let's just stay on the 4-hourly time frame for now. Very easy to read, okay? And this is why I always say, if you want to read divergences, you can go ahead and try your luck at the RSI and make all the mistakes you want, but there's no need. There's no need to fumble with, you know, traditional RSI to read divergences. Just grab the stochastic RSI and learn how to read divergences on a high time frame. And that's it. That's all you need. You don't need all of that, you know, mumbo jumbo, like, you know, trying to read 50 different styles of hidden this, that divergence. Like, if you want to really fine tune your divergence reads, okay, and if you're trading really small time frames, sure, there's a place for it. But then again, if you're just trying to see if a move is going to play out, you can use this stochastic RSI on any time frame, all right? And especially the larger time frames. You see a double bottom on the stochastic RSI and strong bullish divergence, expect a big move up. That's exactly what we're getting, right? A lower low in price action on the SPX on the 4-hourly time frame, and an equal double bottom that's completely oversold on the 4-hourly time frame. Your next move is up, okay? So people who are like, oh, stocks are going down, look at the chart. You know, there's no evidence of that. And remember, why did we get our 61.8% declension or drawdown? Because it's a wave 2, and that's what we expected. After 5 waves, you get 3. Okay, that's basic Elliott wave theory. 5 waves up, 3 waves down. That's exactly what you got, right? That's wave 1. This is wave 2. Wave 2 typically comes to this 0.5 to 618 region, and it's typically a sharp correction because most market participants do not believe in the establishment of the new trend, so they sell into strength, okay, or buy into strength in a drawdown, okay. But here it's a mark up, so they sell into strength, and now we go into wave 3, okay. So wave 3 should take us on average to the 1618 Fibonacci extension. Okay, I say on average because wave 3 can obviously also be extended, and we're going to see that in a second when we're looking at the dollar. So wave 1, retracement of wave 2, we expect wave 3 to come around 48.78, okay? But obviously it can go higher, but that's where typically your wave 3 ends, in that region, right? So stocks are on the way up, crypto's on the way up, all right? We haven't looked at altcoins yet, but let's just have a quick review. Let's scan our crypto bubbles here, okay? And so this is the top, what is this? This is the top 100, okay? Top 100, you can see double-digit movers. Our beloved Litecoin, Wi-Fi, Uniswap almost at 10%, Celsius at 30%, 1inch at 12%, Lido Finance at 10%, DCR. Like, you got a lot of double-digit, you know, movers in the green. Guys, remember, we said September was likely to be bullish. Why? Because we read strong bullish divergence on the daily time frame on pretty much every asset. Why? Because we saw the dollar topping out. We're going to look at that in a second. And so this is playing out just like we thought it would, okay? And it should continue, as we said, because the target for that falling wedge in Bitcoin is all the way at the top at 25K, and that would invalidate the bearish case, the bearish scenario, where you're basically And somebody asked me to talk about the bearish scenario yesterday. And the bearish scenario is basically this: that you come up to where we're at right now, consolidate, and then drop down, okay, and create a lower low. If this breaks, thus, the bearish scenario is invalidated. But the bearish scenario is not really strong, because if you go up in a time frame, right, and you read the larger move, you would have to basically get a failure of this breakout, okay? A failure of this breakout. So you come up and for some reason you fall under. But look at what's happening on the 4 hour, the stochastic RSI. You're pretty much resetting as you're going up. Okay, that is telltale bullish. So as you're consolidating, the momentum's going down. Basically, you're creating a runway for a stronger move up. Do you see what I mean? If you were consolidating and the momentum was going up, you're pretty much getting overbought. And that's exactly what you see in failed patterns to the upside, where you're losing momentum because you're just basically capped out. But this is literally the opposite, where as we're going sideways and up, the momentum is going down and making way for a big move to the upside. I hope you guys see that. All right, so that's Bitcoin. That was the stock market. Now let's have a look at the dollar index, the DXY. Guys, if you're getting value, please like the video, and also shout yourself out. Let me know where you're listening or watching from. Would greatly appreciate it. Always like to know. Always like to know. And also, let me know if there's anything in particular you want me to look at, right? If you want me to look at a particular asset, an altcoin, a stock, whatever. So yeah, hope you're having a great Friday. So let's get on with it. So the dollar index, the basket of currencies traded against the dollar, okay? The dollar, the DXY, is dumping, okay? And a lot of analysts were saying how it's bullish, because on the smaller time frames, you had made successively higher highs. But for us, we're only looking at this exclusively on the daily time frame. So what you want to do is do, as usual, a high time frame read and gain context. You want to understand what you're looking at, okay? And we clearly saw bearish divergence, not just on the daily, but we're looking at this on the weekly, right? Yesterday we were looking at it on the weekly, and we saw strong bearish divergence on the weekly time frame. That's not yet confirmed. Okay, this bearish divergence on the weekly time frame is not yet confirmed. You can definitely see it from here, okay? But that still doesn't let you know that you're going to drop down. That basically says that you're going to correct, okay? So this bearish divergence played out right here, okay? So just like we read bullish divergences, you just flip it. Stochastic RSI is great for doing divergences. You see this. So on the chart, you're making a higher high. On the momentum, you're making a lower high, all right? That tells you that this move was coming, okay? But that move could simply be a consolidation, and then you move up and make a higher high and break, and continue your uptrend. However, you have to understand context. This is why I always say price action is king. You can use these indicators all day, but you have to understand what you're reading. So let's go on the daily time frame, and let's just have a look at what we're seeing. Right here on the daily time frame, you clearly see some confirmed bearish divergence, okay? So you made a higher high and everybody was celebrating, not everybody, but some analysts who were bearish on equities, on crypto, on Bitcoin, were celebrating the fact that the DXY had broken, the previous high and hit a 20-year high. Even the news was up in arms about how the dollar was just going and nothing's going to stop it. Meanwhile, if you look at your stochastic RSI, you can clearly see a lower high on the momentum. Okay? So if you're making a lower high on momentum and a higher high in the price action, this is what you call confirmed bearish divergence. Why is it confirmed? It's because your K and D lines have crossed. You got a cross here and a cross here. You got multiple crosses here. So you have a few counts of confirmed bearish divergence, okay? So that's kind of the lower time frame. But you do not want to rest your analysis only on that sort of local read. Remember, context is the key, because a lot of people get tripped up just reading little bits in pieces of a chart, right? Even though you can see that this is bearishly divergent. Let's say it goes down, consolidates, and goes back up, right? That's possible, perhaps. That's why you want to zoom out and understand what you're seeing, okay? And actually, let's go on the monthly time frame. And I just actually found this chart yesterday. This is something I had marked up some time ago, but I forgot about. I was using another DXY chart, but this one I'd already worked on, and it was much better. I actually made a mistake in the one I was showing you guys the past few days. This one is actually correct, and I'll talk about that in a second. So let's just check any comments, questions, whatever. Guys, what's up? How are you doing? Hope you're having a great morning. Hope you're having a great Friday. Definitely shout yourself out. Let me know where you're listening from. Okay. So, as I was saying, we want to look at the context. So if you look at the DXY on the monthly time frame, you can see exactly what's been going on in the world, okay? You can see that the dollar's been going nuts ever since 2011. It's pretty much been in an impulse, okay? It's been in an impulse. So 2011 all the way to 2012, that was a 5-wave move, and then you had a 3-wave move down for wave 2. So that when the dollar's going down, remember how this works. When the dollar's strong and going up, stocks and equities, crypto are going down because they're inversely correlated. If you have a strong dollar, why would you invest in other things? You just leave your money in dollars, right? Because your dollar is appreciating, right? So this coincides with your bull market. So the 2012 to 2014 bull market was this wave 2, this 3-wave move down, okay? And then the dollar's going back up with wave 3 from April 2014 all the way to April 2015. That's 1 year of solid, unimpeded growth. Wave 3, typically your longest, most impulsive wave, all right? That was a major bear market for equities and crypto, right? 2014 to 2015. And then we go back into correction, okay? And that correction lasts through March 15th all the way to June 16th. So that's about a year of correction, and that's also coincident with a bull market in equities and crypto. And finally, you have your 5th wave, okay? And this is a quintessential 5-wave impulse, where wave 1 is almost the same size as wave 5, wave 3 is the longest wave, wave 2 took about as long as wave 1 took to form, and so on and so forth, okay? Now, what happens after? All right, you all know this. After 5 waves, you get 3. So let me show the lines on this, okay? Let's show the lines on this so everybody understands. And this analysis is important because we can use this, given that when the dollar goes up, we understand that stocks, equities, crypto goes down. All risk-on assets go down. We can try and understand and project when we're likely to start moving down once again, okay? Just using the DXY. Guys, if you're getting value, please like, share, and subscribe, right? Actually, let me take my own advice and share this on Twitter really quickly. I forgot to do that. Here we go. Where is it? don't see it. One second. I'm gonna find it. Talk amongst yourselves. Here we go. Share on Twitter. Here we go. Hashtags. Guys, I hope you're having a great Friday. Are you excited for the move up in crypto and in stocks? I am excited. I am very excited. I'm very excited. Here we go. TXY. Okay, cool. Now, back to our regularly scheduled programming. 5 waves up, 3 waves down, right? So we can see on January of 2017, the dollar starts tanking. And that's exactly coincident with our bull market of 2017. And then we get this 3-wave move, this heinous B wave, okay? And that's basically creating a higher high. This happens all the time. I've said this before on the channel. Your B waves are typically like this. Okay? They're typically like this, where you're creating an expanded flat, meaning the B wave goes above the plane. The B wave goes above the plane of the A wave, okay? And that is what you can call a bull trap, okay? People get confused when you're chart illiterate and you think, oh, the price is making a higher high. Yeah, it's making a higher high, but it's only making a higher high to go down, okay? Because it's in correction. So that's exactly what you see here. Your initial break of structure, your 3-wave move. Okay, actually, your initial break of structure is like this. Okay, it's a 3-wave move targeting wave 4 of the previous trend. Okay, and it's followed by a 3-wave counter trend. Okay, this is your B wave. This is what we're just finishing out. This red line that I have here is the maximum height of the B wave, and I basically took the inverse Fibonacci retracement of the A wave and then measured the phi ratio of that. So if I take my Fibonacci retracement level of the A wave right here, you can see that the 1618 is at 112.34. That's the maximum retracement of the B wave, okay? So typically you do not get B waves that break that 1618. So that's why I have that red line there. And I put that in a while ago, okay? And then finally, if you want to be really careful, you want to zoom in on this right here. And I've counted it out, but I want to zoom in on it for you just to show you what I've done here, okay? So that B wave, so this dollar going up is in context of a larger breakdown, okay? Remember, this is basically in the midst of a 3-wave dump, a 3-wave reversal, or 3-wave correction of these 5 waves up that we've experienced from April 2011 to January of 2017, okay? So 2011, 2017, 6 years of almost unimpeded growth of the dollar, and now the chickens have come home to roost for the dollar. You start correcting, and this correction seems like you're making a higher high, which you are, but in the context of everything, this is all corrective, right? 5 waves up, 3 waves down. All right, and now let's quickly zoom in onto that. Go in on the daily time frame, and you can see what we saw yesterday. We were pointing out yesterday, like, there's nothing bullish about making a higher high when you're creating strong bearish divergence, okay? So you can count this impulse of the B wave, okay? And people are like, oh, the dollar's parabolic, it's going to go up. This is the importance of being able to read price action. Yes, it's going up, but in context of a correction, a larger correction. So your larger bet, especially once it gets closer to these levels, closer to this phi ratio, this big red line, is investing in equities, stocks, crypto, so on and so forth, because it's going to tank. And when the dollar is weak, we know that those risk on assets appreciate. So you got wave 1, wave 2, quite easy to see, wave 3, wave 4, okay? And here you have an extended wave 5. So you have a wave extension in your B wave impulse. So 1, 2, 3, 4, and then here you have what seems to be some sort of ending diagonal. Okay, 1, 2, 3, 4, 5. Okay, so that was the top right here of the impulse. That was the orthodox high. Now you got a breakdown after that. That's an A wave. Initial break of structure, targeting wave 4 of the previous trend. You get now a B wave. Every A wave has a corresponding B wave. So you just zoom in, and you can see this move right here was simply the B wave to this. Okay? It may go on. Remember, B waves are tricky. B waves can be compounded, they can be composed, they can be complex. You don't know. But right now, we're getting rejection. It can go up and down a little bit for a bit before breaking down. But what's important is we're expecting and anticipating a breakdown of this crucial support right here. Okay? This support at... where's this? Let's get our rectangle tool out. If we can find it. Where's the rectangle tool? Oh, it's here. I thought it was there. Why can't I ever find... Oh, here it is, here it is, here it is. Okay. This is crucial support right here. At about 104, 105, okay? When the dollar comes here, it's going to bounce a little bit, but upon breaking this, then all hell breaks loose, okay? I was looking at this chart last night and telling myself, the dollar's going to drop like a rock. I was looking at the bearish divergence confirmed on the chart on the high time frame, and I told myself, look at this growth. You don't grow like this. The bigger they come, the harder they fall, or something like that. Like this comes down hard, and I'm gonna tell you also why it's gonna drop like a rock. Okay, so let's go back on the weekly time frame. Okay, and you'll notice that I put in these time references. So I timed the time it took to form the 5 waves up, and that's about 2051 days. And I timed the time it's taken thus far to put in our B wave. Okay, so we're basically just finished the B wave, pretty much. Okay, we're pivoting up and out of the B wave because the top of that wave 5 was the orthodox high, or the technical high of the B wave. Okay, so A, B, so that's been about, let's just measure that. It's been about 2,000 days, okay? It's about 2,000 days, right, to put in that B wave. Now, remember, one of the principles of Elliott wave theory is that waves of the same degree are equal or comparable in time and in price, okay? If the dollar based here, okay, and this was kind of like a big, if you, let's just zoom back out to the monthly. So you can see the dollar has based completely, and I feel like this is as low as it goes right here. This is as low as it goes, right? Because what this chart is saying is that I'm trying to read this. I can't really say. I can't really say. I wanted to say something, but I can't say this for sure, right? Because here you got this kind of basing, and you got an impulse out of it, and then you got a breakdown that broke the starting, like it's in a downtrend, right? You got a breakdown that didn't just correct a little bit, it kind of corrected completely. However, this right here is not this, okay? So I want to say that this is the start of an uptrend, because I'm seeing, okay, and I think I can say this now. I think I can say this. What I'm seeing on the dollar is 5 waves up and 3 waves down, okay? Here, actually, you didn't have 5 waves up. It looks like you got 3 waves up. And remember, every time you see 3 waves, think correction. 1, 2, 3. Okay, that's a corrective move. So, to me, this is a big flat correction, okay? That's a big flat correction. This looks like, to me, let's look at this. You know, context is important. That's why I'm looking at this chart and considering the price action that was happening in the 70s and the 80s, because I want to understand what is going on here, what's likely to happen here, right? You always want context. From what I'm seeing in the dollar, it looks like some sort of AB base, where this is your initial break of structure, right? This is your A wave, this is your B wave, and then you have a small A, small b, right? That's exactly what it looks like. Guys, you see that? That's an AB base. And I don't think we have a momentum. We do. Let's go on the 3-month chart. Not every day you can go on the 3-month chart and get data. Okay, so what do we see here on the 3-month chart? We basically see that in this case right here, we were coming down while we were AB basing. I don't see any divergences. Let's go on the yearly chart. Let me add that. I've never had to look at anything on the yearly chart, but there's a lot of data right here, so we can do this. This is in-depth. I've never gone this in-depth on the DXY, guys. If you're getting value, please like, share, and subscribe. Why can't I add? I want to add. Oh, okay, I get it. I get it right here. Okay, this is the yearly chart. Okay, so the yearly chart. Okay, the yearly chart definitely shows us that we're coming down, okay? But also the yearly chart shows us that it doesn't show us much to put this in context, right? It doesn't show us much to put this in context. So let's go back to our monthly chart. Although I do like the fact that I like our read right here. Yeah? I like our read of this being a massive consolidation reversal pattern, right? Who sees that? This is big A. This is your composed big B. This is small a over here. One second. This is small a. This is small b. And this is the start of your impulse. Okay, this is telling me that the dollar's been pretty much playing at a reasonable level, right? Kind of consolidating between maybe 85 and 150 or 130 for 40, 50 years. And now it's basically going to go through the roof. That is the read on the chart. I don't know anything about macroeconomics. I don't know much about macroeconomics. I don't know much about how economies work. But I know how to read charts, and the chart for the dollar looks like it's going to go up even higher, which means I think that inflation's going to eventually get worse, right? Because if the dollar keeps going higher, I think that's not good, right? I'm not exactly sure. Guys, chime in. I'm not in my element. I'm I'm a chartist, not an economist. So I don't exactly know what it means if the dollar goes crazy. But what I'm reading on the chart is that the dollar right now is entering into impulse. Okay, it has entered into impulse in 2011, and it's correcting in its second wave. And what do we know about two-wave corrections or wave two corrections or any correction, right? The principle or the guideline of proportionality or of they call it equality. I like to call it proportionality because waves of the same degree are proportional or comparable in time and in price. So if it took 2040 days to go up for 5 waves, it should take more or less a comparable amount of time to come down in 3 waves. And we've already got the B wave, right? So we've got wave 2 of 3 in this correction printed, and that only leaves us with what? A very little time to put in this impulse. This is why I think the dollar is going to drop like a rock, because this impulse doesn't have much time to go, given the time we've taken for both the A wave and the B wave. I hope that makes sense, right? So this is why I keep saying, when I look at this chart, dollar's going to drop like a rock. It's most likely going to drop like a rock for the next, 100, 150 days, right? And that's, again, coincident with our read that crypto is probably going to go up for a good 6 months to 200 days, and stocks are going to do the same. Meanwhile, the dollar is going to drop in that same time, which would satisfy that inverse correlation that the dollar and these equities and cryptocurrencies, risk on assets have. Guys, if you're getting value, please like, share, and subscribe. Let's just check. Any questions, comments, problems? Hey, Samware, what's up? Happy Friday. Let's see. Okay, so yeah, that's what I'm seeing on the dollar. And given this massive rejection, right? Obviously, you can't see it on the monthly, but you can see it on the daily. Given this this massive rejection, and we're topped out, right? Look, our trusty momentum indicator, even with everything that we know in terms of reading price action, if you know just a little bit and you're reading momentum indicators like the stochastic RSI on high time frames, you can do a lot. You can be really consistent in trading tops and bottoms, because it literally just shows you when momentum is exhausted in either direction. Okay, so this is clearly bearishly divergent right here, and it's coming down. And like we said, our main support, our biggest support, is around 105. Let's turn on our VPVR if we can here. No, the VPVR doesn't work here, which is fine. But it looks like this is the area that once it breaks, it's going to drop like a rock. But in any case, it's going to drop like a rock for the next 5, 6, 7 months. I see the dollar targeting. Let's talk about targets. Okay, and this is also simple. Let's get rid of our momentum indicator. Let's go back on the monthly time frame. Here we go. What's the target? Okay, so we know that typically wave 2 comes, and sorry, so let me just say this. Your typical wave 2 is a zigzag, all right? It's a sharp correction because people don't really buy the change of trend, right? Look at the trend. The trend in the dollar has been down over many, many years, over many decades. It's been down. And all of a sudden, you put in this AB base and you start going up. Typically, what happens after wave 1, people are like, that's not true. The trend's going to continue, and they sell off into strength, okay? And so you get a sharp zigzag, something like this. Okay, you typically see that in wave 2, but you're not seeing that here. You don't always get a zigzag. Sometimes you get a flat correction, okay? And here you did get your flat correction, and it's rather complex. You get a composed flat correction here. A wave, 3-wave move, an intermittent B wave, and then your 3-wave or your 5-wave impulse ending that correction. Now, even though you got a flat correction, you should still fall within the norms of the 2-wave target, wave 2 target, which is the 0.5 to the 618, okay? And that's exactly where you have the C wave in my projection ending. Now, I did not pull out the Fibonacci retracement level and then put the C wave in the middle of the 0.5 and the 618. What I did, rather, was take my Fibonacci extension tool and use prior data. I used my length, the length of my A wave, okay? So my nominal length of the A wave, which is all the way down here. Or actually, what I do, I think I used the technical. The orthodox low of the A wave right here. Let's just be consistent. Let's use orthodox highs and lows. Okay, and then the orthodox high of the B wave, which is actually right here. Let's not count the pivot. And your C wave should actually come here. Okay, if we use these orthodox highs and lows. Okay, if I'm using the nominal low, it'll come down here. Okay, but I think the orthodox low should be used, the orthodox highs should be used. So my target's actually something like 88 points, $88. I don't know. I have no idea. I don't know anything about economics. I just know that the DXY and cryptos are inversely correlated. That's the only reason why I'm looking at this. Okay, so guys, don't make fun of me or think like, what the hell is this guy talking about? I have no idea what I'm talking about in terms of like what this means. Are these dollars? Are these points? Like, whatever. I don't know. I have no idea. Chime in if you know. Okay. So anyway, I see this flat correction, this ABC flat correction, targeting 88 because taking the wave A, retracement of wave B, target of wave C, which is 1618, and guys, look at basic support and resistance. This is coincident with this level right here. Do you see that? You see this price action where you put in your small a, small b in your AB reversal, in your second degree of your AB reversal. That's exactly where I think we're going to land, around 88 right here, okay? And the time, it can't be long. One, because we're in impulse, we know that. And two, because you dilly-dallied, right? You took your time and you trapped a lot of people that are bullish on the dollar right here. Where the hell is my pen? A lot of people are going to be confused by this. Lots of people. Lots of people are thinking this is a new impulse because they can't read price action. But for us that know, we see 3 waves, we know it's a corrective sequence, okay? And we know the true move isn't over until we see an impulse, okay? And that impulse right here is just the impulse of that 3-wave move, that intermittent B wave, okay? So that's what I'm seeing on the dollar. That's why I'm seeing the dollar fall for a good 6 to 7 months. And that's why I'm seeing crypto rise for a good 6 to 7 months. That's why I'm seeing stocks rise for a good 6 to 7 months. Guys, if you're getting value, if you got value, please like, share, and subscribe. That's pretty much it for me. At this point, we could just look at specific altcoins, see what's going on in the market, and then call it a stream. All right, so what's Bitcoin doing? Let's go on the hourly time frame. Get off the log. Okay. So this level is an important resistance. Looks like we're consolidating here. Okay. I wouldn't call it a rejection quite yet, because a rejection would be if we started to form like strong wicks here, you know? These candles with really long wicks to the upside, that's rejection. But when you have candles like this, where the body's quite substantive, that to me is just a consolidation in this region, right here. And you did make a higher high, right? You broke this high, you consolidate above it, and then you continue. That's what should happen, right? You break resistance, you consolidate, you retest, and then you continue your move up. So synthetics said goodbye. Okay, synthetics is off to the races. So this is a good sign for, this market, this cryptocurrency market. It's correlated. It's heavily correlated. So you get really strong bullish price action here in certain assets. Expect others to follow. Okay. So synthetics is gone. What else is good? EOS is doing okay. Alright. What else? Ethereum is doing okay. It's not great, but it's doing okay. But you really want to see, like I said in the beginning of the stream, strong volume and a strong move, like big green candles and strong volume. That's what you really want to see for this move to the upside, right? For it to be really believable. Litecoin's doing really well. Litecoin, once again, strong volume, strong big green candles. This is a good sign for continuation to the upside. That's what you want to see. Don't be surprised that Bitcoin's lagging. Don't be surprised that things are moving and Bitcoin seems to be coming up the rear. Guys, Bitcoin dominance continues to drop. For those that are in disbelief at the idea that we're in alt season, right? This is your proof. If you understand what this means, like, that doesn't confuse you, right? Let's turn off volume. Let's actually get on the weekly time frame. And you can see it right here, right? It's incontrovertible. Dominance has been dropping like a rock for quite some time, and it's at major support. And when it breaks the support, okay, it's pretty much been working on this support ever since April of 2021. Okay, when it breaks this support, you'll get the alt season of alt seasons. Okay, and that's what we're pretty much working on right now. We're already below 40. Okay, so nothing really. Litecoin I already talked about. Polka dot. Let's look at that for a second. Let's go on daily. Guys, and if there's anything you want me to look at, please say it now, because after I do this mini round of altcoin reviews, I'm just gonna wrap it up. Yeah. Let's see. Okay. So polka dot's doing quite well. Let's zoom in to let's go on the hourly time frame. Okay. Strong move. This is a strong move, okay? So this is where we said Bitcoin should be, right? You had this move to the downside, and you're basically coming up and forming this double bottom, this W pattern, okay? I don't like the way I drew that. This W pattern, and now you come to a new resistance, you consolidate a bit, and then you eventually break this out. So all about pump, consolidate, retest, pump, consolidate, retest, right? Pump, break resistance, retest, and you continue up, okay? And now if you throw on your momentum indicator on the higher time frames, let's say daily, you can see that you're still playing out that strong bullish divergence that you had on the daily time frame, okay? And again, it's a daily time frame, so don't expect it to be exhausted so quickly, right? You have price action coming down, you have the momentum going up. That is your strong bullish divergence on the daily time frame, okay? Let's see. So Polkadot's doing well. It's already at resistance. Ethereum, I think, is at resistance as well, no? Let's see. Almost. But do you see this? Pretty much, Ethereum's getting to resistance. You can say it's at resistance, actually, and it would be right here. Ethereum just broke resistance. Right here. Okay. just broke resistance. So you would be then retesting it if you haven't already retested it, and then breaking out from here. Okay, so this massive breakouts, throughout the market. We already saw what it looks like in Bitcoin, right? You would take this right here. Right? But across the market, you're breaking important resistances. Cardano, same thing. You're breaking important resistances. And you I think in Cardano you broke that some time ago, and you're basically continuing, right? You broke and retested, and you're continuing up from there. So that would be like that. Let's see. EOS I don't feel like looking at. SNX we already looked at. Let's look at things on our larger watch list. 1 inch. Yeah, 1 inch. Let's look at that. Okay, that's, again, you're coming to the neckline of this W pattern. Okay? Do you see that right there? You're just butting your head up against that. You break it, you retest, and you continue. Expect much bigger moves in the market, because this doesn't look like a rejection. This looks like a consolidation at resistance. Okay, if it was rejection, what you would see is big wicks in your candlestick pattern. Okay, big wicks in your candlestick pattern, but you're not seeing that. You're seeing a controlled consolidation. Yeah. And then now let's have a quick look at our bubbles, see if there's anything that we have overlooked in terms of the big movers. Top 100, pretty much the same as we left it before. Synthetics really jumped since the beginning of the stream. Litecoin jumped a bit. And now top 200. Celsius was there. SSV, we didn't see. VGX is back up. Sushi, we didn't see that. Okay, so things are breaking out. Okay, top 300, you have Very, SYS, Saitama, DAG. Okay, we didn't see that before. Top 400, XMON, I don't know what that is. Porto, I don't know what that is. That's a football club, I think. Or soccer club. Okay. Top 500. Rook, right? That's pretty much all I recognize. CET, I don't know what that is. And then top 600. Yeah, I don't really recognize any of these. But any case, you're going to have big moves. You're going to have big movers. Name of the game is remember what you're doing. Don't just, FOMO into anything. Don't buy, don't trade in and out of stuff, right? Just buy and hold. Eventually your targets are met. You take profit. And if this indeed is what we think it is, you're not going to hit your actual targets for a few months, right? Because we saw the dollar going down for 6-7 months. If you really want to get money, you really want to, get those gains, it's not going to be from buying and selling multiple times, right? Not financial advice, but the smart thing to do is just to buy and hold. Wait those 180, 200 days before taking profit when the dollar index is going to bottom, okay? And then starts to turn around again. That's when you want to take profit. You want to take profit when the stock market is also topping, right? When Bitcoin's topping, that's when you want to take profit, and then we rinse and repeat. So yeah, that's pretty much it for me. But yeah, the name of the game is, ooh, look at that, look at that. So 4-hourly time frame, DXY, big move. But remember, is this a big move to the upside, or is this just a counter? Okay, so let's go on the hourly time frame. Let's have a look at this. Okay. So you have some bullish divergence on the hourly time frame that you played out, okay, in this candle. Now, if this is what we think it is, okay, this could be two things. This could be another B wave, or this could be a B wave, okay? Or this, so this could be an A wave. This could be a B wave, okay? Or this could be impulse. So this could be an impulse, and this could be a wave 2. If this is a wave 2, and we're already in the impulsive move down, what we're going to see is rejection. I think the orthodox low is right here, okay? Because that big wick showed me orthodox. So what we should see is rejection no higher than 109.62, which represents the 0.618 or phi ratio of this move down. Do you see what I mean? Okay, like one of the reasons for a while on this page or this channel I never looked at the DXY under the daily time frame is because it's, you know, it's not, there's no point, you know. You want to be looking at larger trends. You look at Bitcoin's price action, it looks very bullish. Look at the S&P, looks quite bullish. You look at the US dollar index, looks quite bearish. You just wait for those to mature to play out, okay? I don't see the point of trading the smaller time frames and like paying attention to every little move. I guess it's fun, you can look at it, but know that eventually you will get a rejection that will lead into impulsive price action to the downside, okay? But again, this can come up, but that would just be another B wave. But this is not an impulsive move, okay? Right? You see this. This is 3 waves. 3 waves. 3 waves, right? So that's not impulsive. There's nothing impulsive about this move up, so don't get fooled. Don't get fooled. Even though this pivots here or makes a higher high, don't get fooled. All right, let's see, any questions, comments? If not, we're gonna call it a stream. Guys, it's been real. Nice hash login. Do you only trade or do you hold decentralized cryptos? Nice hash login. I hold and trade, okay? So when I say I trade on very large time frames typically, okay? So I try to trade entire bull markets and entire bear markets, okay? I've done day trading before. I don't really think it's that profitable, you know, but I can make so much money with so much less effort just buying and holding. But I do sell. I'm not diamond handing. I don't think that's smart, especially if you can read a chart, right? So I hold cryptos for a few months, right? So I've been holding like a lot of different assets for some time and accumulating them at the bottom of this bear market, and I have every intention of selling them in 6 to 8 months when I believe the market will top, at which point I'll sell into dollars or stable coin, and then take a very small percentage of my portfolio and play around with it, shorting the market for however long the bear market is projected to last, right? You know, however many months. And then once we get back to the bottom, I rinse and repeat. So I am a trader, but I'm not like one of those guys who's trading the 5-minute, 15-minute chart. Those days are over. It's just not worth the time or the effort. You know, it's a low return, high risk game that I'm not really willing to play. I hope that answers your question. But guys, that's pretty much it for me. Hope you have a great Friday. I'm going to call it a stream. We looked at everything. We looked at the dollar index. We looked at the S&P 500 as a proxy for the stock market in general. And we looked at Bitcoin and a bunch of altcoins. We're still bullish. I do believe that we are going to move up, not just in the immediate short term, but in the longer run for all the reasons I stated in the live stream. Guys, if you got value, please like, share, subscribe, and I will see you guys tomorrow. Take care. Have a happy Friday. Bye.